Hello everybody. So in this video we will try to understand what is foreign exchange market. The foreign exchange market is the market in which individuals, firms and banks buy and sell foreign currencies or foreign exchange. The purpose of the foreign exchange market is to permit or allow transfers of purchasing power denominated in one currency to another. Or to put it simplified manner, to trade one currency for another. Like say a Japanese exporter selling automobile to a United States dealer for dollar, or United States one manufacturer selling machine tools to a Japanese company for yen. So ultimately the US company would be interested in receiving dollars, and whereas the Japanese exporter would be interested to receive money in yen. Yeah. But the challenge is every party wants to trade and deal in his own currency. But in trade, you can invoice only in a single currency. The trade cannot be invoiced in a multiple currencies. Right? And the parties mutually have to agree on a currency beforehand. The currency agreed could also be any convenient third country currency. Suppose there is a trade between Japan and India, but the currency agreed could be US dollar. Or if an Indian exporter sells machinery to a UK importer, and the exporter could invoice in pound, in rupees, or any other convenient currency like US dollar. Yeah. Because it would be inconvenient for the individual buyers and sellers of foreign exchange to seek out one another. And that is why a foreign exchange market has developed in order to act as an intermediary. Yeah. And also individuals, firms and banks want to exchange one national currency for another. The demand for foreign currencies arises when tourists visit another country and need to exchange their national currency for the currency of the country they are visiting. Or say when a domestic firm wants to import from other nation, or when an individual wants to invest abroad. Right? So investing, then traveling to different country, business with different country, cross-border transactions, so on and so forth. Also, a nation's supply of foreign currency arises, from foreign tourist expenditure in the nation, and from export earnings, then receiving foreign investments. Yeah. So for example, a US firm exporting to the UK is paid in pound sterling. The US exporter will exchange the pounds for dollars at a commercial bank. The commercial bank will then sell these pounds for dollars to a US resident who is either going to visit to UK, or to a firm that wants to import from UK and pay in pounds, or to any United States investor who wants to invest in sterling. Yeah. So we can say a nation's commercial bank operate as a clearing house for the foreign exchange demanded and supplied in the course of foreign transactions by the nation's residents. So that is the main function of this foreign exchange market. And simply we can say there are 4 levels of participants we can identify in foreign exchange market. So at the first level, as I already explained, there are tourists, there are importers, there are exporters, there are investors. So they are at the first level. They are the immediate users and suppliers of foreign currencies. Yeah. At the next level or second level, there would be the commercial banks, which act as clearing houses between users and earners of foreign exchange. And then at the third layer, there would be foreign exchange brokers, through whom the nation's commercial banks even out their foreign exchange inflows and outflows among themselves. Yeah. And at the fourth level or highest level would be the nation's central bank, which acts as the lender or buyer of last resort when the nation's total foreign exchange earnings or expenditures are unequal. So central bank of a country can decide based on their foreign exchange reserves whether they reduce foreign exchange reserves or add to them. Yeah, so these are the different types of market participants in foreign exchange market. So let's see some interesting facts about this Forex market. This is the largest, I repeat, the largest and most liquid sector of the global financial market. Yeah, it is 24/7 clock is ticking for this market. There is nothing called insider trading. It is as transparent as possible. It only needs, if you want to trade in this market, you want to take exposure in this market, all one needs to have a command over that subject knowledge. You have to have a strong nerve. You should be capable to scratch the surface. You have to have one laptop with internet connectivity, and that's all. From anywhere, anytime, you can participate in this market. And average daily turnover from foreign exchange market is 5.3 trillion US dollar. This is mind-boggling. This volume is much, much bigger than US GDP itself. And this is one day transaction volume in foreign exchange market. Deutsche Bank is the largest global forex player. Almost it is 15% market share it is holding, followed by Citibank roughly 12% and Barclay Bank then 11%. Net there are 10 big forex player who is cornering 80% of the forex market transactions. And US dollar is the most popular currency. It's involved in 87% of all trades. Then Euro 33% and Japanese yen 23%, and then Great Britain pound 12%. Yeah, and cross currency, the most popular cross currency is US dollar and euro. And 4 countries, US, the United States, UK, Singapore and Japan, account for more than 70% of foreign exchange trading. So hope we have got a very brief overview about this market. In my next video lesson, we will see the nitty-gritty of the forex market, the terminology, how it works, and how currency conversion, forward rate, spot rate, direct quote, indirect quote, etc. we will learn. It is very interesting, and I'm sure that you also would enjoy a lot. Thank you.